Now, we're looking at the Kenyan markets, looking at the NEC today. If we're looking at that performance with those boards up there, we've got an increase of 0.95%. That's over 1 month, as you see from the chart there, and it's 4758 at the moment. 4758 points is where it has closed. Now, on the currency front with the shilling, there's been quite a lot of activity with the shilling. 0.29% increase over there, and it's at 85.95. Well, joining us now in our studios in Nairobi to give an update on the Kenyan markets is Kenneth Minjire, who is a fixed income analyst at Stanlib Kenya. Let's start with the big picture there, Kenneth. The uncertainty around the presidential election, is that what's affecting the market at the moment? And when do we expect that finally to be resolved?
The ruling from the Supreme Court actually comes through, is expected on Saturday. So yes, it's actually quite the biggest thing at the moment locally, and I think it is affecting especially the equity market slightly. We're seeing a lot of investors holding off, awaiting the Supreme Court ruling. So, but the turnover is still quite healthy. It hasn't dipped below levels of about 400 million. So looking forward, I think it will be a pretty quiet week, but market is still quite positive, and sentiment around the market is still quite positive going forward.
It is positive. Would you see, what is the market pricing into that decision, or is it really a 50-50 open decision? What are people saying? What are the experts saying, the analysts, the legal analysts, the political experts? What are they saying the call is going to be? And presumably that would be built in by the market.
Okay, we haven't seen this priced into the market as yet, because as you've said, it's still 50-50. It could go either way, and there's no indication from the ruling so far we've seen from the Supreme Court on which way it could swing. But of course, if the Supreme Court comes back on Saturday and rules against the petitioner, the swearing in will occur the following week, and I think it will be business as usual. We'll expect a huge rally in the market. If the petition does go through and we're forced to go back to elections, of course this will also delay the uncertainty, as in, because elections will have to be held about 60 days after. So this will leave the market in suspense for quite a while, which is actually not very good for the market. And we may see this begin to be priced in the following week if the petition does go through.
Well, okay, all eyes on that this coming weekend. It has dragged out and kept that uncertainty going. Let's look at the market itself, and let's talk about the shilling. I mentioned there that it had been moving. You know, we often watch that shilling. It doesn't move by that much. Swung between advances and declines. It's the second day of those hearings. What's going to happen with the shilling?
Basically, I doubt that the movement we saw in the shilling had much to do with what's going on at the Supreme Court. Basically, what we saw is the market has been very liquid this week. CBK was able to pick up about 23 billion last week, but the market still has a lot of maturities, and also a lot of money has been released by the government. So that's why we're seeing the CBK is coming in aggressively into the open market to sterilize liquidity. Yesterday they were in the repo market to pick about 7 billion shillings. Today they were in to pick about 10 billion. Basically, as I've mentioned before, the biggest threat we've realized that to CBK is usually the weakening of the shilling. So whenever it seems to weaken past a certain level, they'll come in aggressively. We may see this affect the short end rates, but this is only short term, possibly for the next 2 to 3 weeks. But of course, there are also a lot of instruments apart from the repo that CBK has put in place to mop up this liquidity. There's the 364-day T-bill, which is now weekly from monthly, and then there are the other prime rates, the 91 and the 182-day. And also, I think, of course, there's the bond issue that we expect for April. So the spike in short-end rates that we expect from this aggressive operations by central bank, this spike may only be short-lived, probably for about 2 to 3 weeks. and we should see the rates begin to stabilize again at the short end. Basically, if you noticed, as at the close of last week after the T-bill and 2-year and 10-year bond auction, CBK had met about 83% of its borrowing target for this financial year. We still have about 3 more months to go to this financial year, which is quite commendable. And looking at the liquidity in the market, the instruments on offer, I actually think they will beat the target of June to meet their borrowing target, which will mean money demand from Treasury will actually come off, and we should see this affect interest rates going forward.
Okay, well, Kenneth, interesting story there on Total Kenya, warning shareholders that profit will be materially lower for the period to 2012 December. But on the other hand, there was a big fraud by a company which bought oil illegally and sold it. I'm not sure of the details there. In fact, would that have been meant a profit for the company if this hadn't happened? Sounds like quite a serious exception to the results.
Yes, basically they actually did mention that if it was not for this one-off occurrence, they would have posted a profit for this year. And I think this is actually something that is quite common in the oil industry. I mean, the margins in the oil industry are usually very slim. About 1 to 2%. So any exceptional items usually affect the bottom line quite a bit.